Hello, student. Welcome to this session. My name is CA Garima, and I'm going to teach you the corporate and business laws for the ACCA. Students, today we are going to start a very important yet very interesting chapter, and the name of the chapter is Types of Business Organization. This is a chapter which is actually very important from the practical point of view as well, apart from the theoretical and the exam point of view. Okay, now what is the name of the chapter? The chapter is Types of Business Organization. Students, here, first of all, we need to understand that what exactly is a business organization. Imagine a situation wherein you plan to start a business. Let's say I want to start my own clothing brand. Okay, I have planned that I want to start my own clothing store. Now, I want to set up this business. I want to start this business. The question which come to my mind is that how will I start? Should I start is it in the form of a proprietorship concern, or should I form a company? So this chapter will help you understand that how different types of businesses are set up. What are the different types in which I can set up my own business? Okay, in this particular chapter, we will basically talk about the partners, what are the partnerships, how we are going to start my own business. Let's start from the very beginning. I want you all to first of all understand that if you have a plan to start your own business, what are the different options, how you can start, what are the different ways of incorporation. Okay, students, the first thing, how I can set up my business in the simplest manner, I would say, is the sole trader or sole practitionership. Okay, if I am the only one who is going to set up this business, who is going to manage the business, then I have the sole proprietorship, which is the best option. Okay, here in the case, I want to start my business as a single handed person. In this case, students, I am going to be the owner and I am only going to manage the business. That means the ownership and the management, everything is in my hands only. Okay, so whenever we set up a business in the form of a sole trader or a sole practitionership class, the owner is the business itself. That means there is no separate legal entity. Okay, that means this business is not something which is different from me. Me and my business is actually the same. Owner is it the business itself. Owner will own all the assets. Owner will be liable for all the debts. So it's the simplest form. If I want to start this business, I don't want to get into much of a legal formalities, I can start my own sole tradership. In that case, whatever are the assets, it's mine. Whatever are the liabilities, that is also mine. Okay, there is no legal formalities which is required to set up a sole trader business. That's why we call it as a simplest form. This form of business is inappropriate for large businesses. Students, if I want to set up a business, but that is going to be on a very large scale, then in that case, sole tradership or sole practitionership, it's not going to be very helpful. Why? Because obviously, I would want to add on more people. I would want to have funds from more people. In that case, I have to move to the other types of businesses. So the first type that we have discussed is the sole trader or the sole practitionership. What is the next type? The next type is a general partnership. Class, whenever I say partnership, please understand that we need at least two people. I can't start a partnership with my own self. Okay, so I would definitely want someone else to be involved with me as well. This general partnership is defined by the Partnership Act 1890 as the relationship which subsists between the persons carrying on in the business in view of profit. Student, this is very important. If I and my friend, let's say, imagine me, Garima, and her friend Ankita, we want to start a business. Okay, we want to start a business together. In this case, we can form a partnership as per the Partnership Act 1890. But the very important thing is the view of profit. That means our objective should be to earn profit. Let's say me and Ankita, we started a concern, we started a business, but our objective is not to earn profit. We want to do charity, we want to do social work. That is not a partnership. That means one thing which is very important in the case of a partnership is that there should be two people involved, at least two people involved, and they should run the business with a common objective of earning profit, with a common objective of making profit. Okay, this is the second type of business, how you can set up your business organization. First is the sole trader, second one is the general partnership. Students, when I say general partnership, here the liability of both the partners is unlimited. We are going to talk more about it. I'm just giving you a brief as of now. The third type, how I can start my business, is a limited partnership. Now, this is also a partnership, but it is formed under the Limited Partnership Act 1907. The General Partnership Act was formed under which act? 1890. However, the Limited Partnership is set up under Limited Partnership Act 1907. There are some differences which we are going to discuss. Okay, but these are the different ways I can start my business. Then the fourth one is the limited liability partnership. Students, when I have discussed about the general partnership or the limited partnership, here in this case, there is no separate legal entity. Okay? There is no separate legal entity. But if I want to set up a business where my business is separate from me, where my business has a separate legal entity, then in that case, I can set up a limited liability partnership. From the name itself, it is very much understood that it is a partnership where the partner's liability is limited. What is the name? Limited liability partnership. Now, here it is an artificial legal entity. That means it has a separate entity, separate legal entity on its own. It's not the same as its partners. Okay. And an artificial legal entity with a perpetual succession. What does it mean? Members may come and go, partners may come and go, but the LLP, limited liability partnership, will not dissolve. It will continue. It can hold the property in its own name. As I told you, that this is a separate legal entity. Now, when it is a separate legal entity, it has all the power to own its own property. Then it can enter the contracts in its own name. It can create floating charges. It can sue the people. People can sue this LLP. So, limited liability partnership has a separate standing. It is a separate legal entity with a perpetual succession. Perpetual succession means the partners may come and go, but the LLP is going to be the same. Okay, it can enter into the contract in its own name. It can sue people. People can sue this LLP. It can enter into the contracts. But the liability, it's very much evident from the name itself, limited liability. So the liability of the members is limited to the amount of the capital they have invested. That means if me and Ankita, we have discussed about this example, Garima and Ankita have started a business, okay, but we don't want our personal assets to be involved in this business. We want our liabilities to be limited to the amount we have invested. That means, let's say we have started this business with $10,000. Okay. $10,000 I have invested and $10,000 Ankita has invested. Now, in this case, if we have formed an LLP, then in that case, our liability would be limited to this amount, not our personal assets. Okay, my personal assets will not be involved. So the liability of the members is limited to the amount that they have agreed to contribute. But since it is a separate legal entity, we have to file the annual accounts, we have to file the annual report with the company's house, and we have to provide company house with all the records. This is a limited liability partnership. Then There is another concept. There is one more concept, which is company. If I want to start my business, I have one more option, that I can start my own company. Okay. The company is also an artificial legal person, very much like a limited liability partnership. But yes, there are some differences. For the company, we have a whole chapter. We'll discuss everything about company in the future chapters. But as of now, we are just understanding that what are the different forms in which we can start our business, and we have discussed those. Okay. Now in this chapter, we are going to discuss majorly about the different types of partnership. I will continue with my example that Garima and Ankita have started a business. Okay. We have joined hands to do a business with a view to make profit. As I told you, this is very, very important. If there is no profit objective, it cannot be called a partnership. Okay. Let's read the definition. A partnership is a relationship which subsists between two or more persons. That means how many people are required to form a partnership? Minimum two people are required, carrying on a business with a view of profit. So the words which I have highlighted is very, very important. Partnership is basically a relationship where two or more people start a business with the objective to earn profit. Okay. As per which act? As per the Partnership Act 1890. A partnership can be a very small operation, or there could be large firms of solicitors having hundreds of partners. That means I can start my partnership act with, let's say, partnership with, let's say, only two members, or we can have hundreds of partners who are coming together to start this business. Okay. Now, imagine we have started a partnership firm. Okay. What are the different types of partners which could be involved in this business? First one is called the general partner. Student, general partner is the one which is actively involved in all the day to day business. Since we have started our own clothing store, now the partner who is fully involved in all the day to day operations of this business will be called as the general partner. Let's say I am fully involved in this business, so I will be called the general partner. Now, there is one more partner which is called a sleeping partner. You can very much understand from the name itself, sleeping partner, who takes no active part in running the business. Imagine Garima and Ankita have started a business. Garima is actively involved in the day to day running of the business. So I will be called as a general partner. But Ankita is not actively involved. She has just invested her money in the business. So if she is not taking an active part in the running the business, then she will be called a sleeping partner. But it doesn't mean that she will be relieved from the liability. No, even though she is a sleeping partner, she will still be jointly and severely liable for the debts and contracts of the business. All the contracts that the business has entered, all the liabilities, she will be fully involved. Okay. Jointly and severely. What does it mean? Jointly means Garima and Ankita will be jointly liable to pay off the debts. Okay. Now imagine there are some debts on the partnership firm, but I am not able to pay. I don't have the money. I'm not able to pay. Now, in that case, Ankita will have to contribute single handedly to all the debts. Why? Because here the liabilities of the partners is unlimited. When the liabilities is unlimited, we have to contribute from our personal assets as well. Okay. That is a one disadvantage of forming a partnership. But there could be a limited partner in a limited partnership. As I told you, there is one more concept which is called a limited partnership. Now, sometimes students get confused between limited partnership and limited liability partnership. Students, please understand that these are not the same. There is a difference. Okay. Limited liability partnership is formed under LLP Act. However, limited partnership is formed under the under the Partnership Act only. It's not the LLP Act. Okay. Contributes to a specific amount of capital. Now, whoever is the limited partner in the limited partnership, let's say we have a partnership wherein Garima, Ankita, and Sneha are involved. Okay. Now, here, let's say Sneha is having a limited liability. Now, if Sneha is having a limited liability in this in this limited partnership, then she will contribute a fund. Let's say she has contributed $10,000 in this partnership. Her liability will be limited to that amount only. But Garima and Ankita's liability will be unlimited. That means the partner who is having limited liability in this limited partnership, he will only be liable for the funds that he have invested. Okay, but the other partners will be liable for the other funds as well. That means they will have the unlimited liability. But there is a problem. This person, Sneha, she is having a limited liability, but she cannot take part in the active management of the firm. If she is not having the unlimited liability, she cannot be involved in the partnership management. Who will be involved? The partners who are having unlimited liability. That means Garima and Ankita will be involved in the management, but Sneha will not be involved in the management of the firm. Then there is another type of partner called the salaried partner. Now, again, students, you can understand it from the name itself that salaried partner means who is a partner just for the name's sake. He is not even getting the profits. He is just having the fixed income from the partnership, like we get the salary. Okay, he will receive a fixed amount as income. He is not a real partner unless he receives some share of profit. Because if, let's say, I am a partner in a partnership firm, definitely I would be wanting the profits of the partnership as well. But this salaried partner, he's just getting a fixed amount as salary and he's not getting the profits of the partnership. This is the different partner who is called the salaried partner. I hope you all are able to understand the different types of partners which could be involved. Okay, we have discussed about four different types. First one is a general partner. He takes active participation in the day-to-day business of the in business of the partnership. Then we have sleeping partner. He is not actively involved. When he is not actively involved, it doesn't mean that he is not having the liability. He still have all the liability. But if you are a limited partner in a limited partnership, then you contribute a specific amount and your liability will also be up to that amount only. But the con is that you will not be able to take active participation in the management of the firm. Okay, salaried partner is the one who is just getting the salary from the partnership firm. He is not even getting the profits of the partnership. I hope you all are able to understand the types of partnership partners. Let's move to the different types of partnership. Now, I have touched very briefly about these different types of partnership. Let's talk more about it. I have told you that there are three types of partnership. The fourth one is, of course, a company, but we are not talking about the company over here. We are talking about the partnership. The first one is a partnership, or you can call it as a general partnership. When I say general partnership, it is governed by the Partnership Act 1890. Now, this is the default position if the partnership is not formed under these two acts. That means if you have just started a partnership, then we will assume that it is as per the Partnership Act 1890. This is a general partnership wherein all the partners have unlimited liability. All the partners have unlimited liability in a general partnership governed by the Partnership Act 1890. Second one is the limited partnership. Now, this limited partnership is not governed by the Partnership Act. It is governed by the Limited Partnership Act 1907. You have to understand about it. Now, here, there should be one person who is having limited liability. But of course, the one who is having limited liability, he will not be able to be involved in the management. Okay. Then the third one is a limited liability partnership, LLP. This is something which is formed nowadays very commonly. Very commonly, there are firms which are opening as LLPs, limited liability partnership. You all also, when you will become ACCA, let's say you want to start your own practice, you might want to start your practice in the form of a limited liability partnership, and you have to get yourself registered under the LLP Act 2000. This has a separate legal personality which is very different from the different partners. It means that it is legally separate from its members. It is not the same as the members. It is legally separate from its members. Okay, it has a separate legal entity, and here all the partners will have limited liability. Okay. Here, all the partners will have limited liability. These are the different types of partnerships. I hope you all are able to understand this. Let's talk more about partnership. We want to understand, we have decided that we want to set up a business, we want to start our own clothing store, and we want to set up a business in the form of partnership. So we want to know that what are the different characteristics of partnership. Now, in order for a partnership to exist, a business must be carried out. I already told you, if there is no business, there is no partnership. Okay, there must be a business, and there should be a view to earn profit. If we are, let's say, starting a business, but the objective is not to earn profit, the objective is to do some social work or to offer some social benefits. Now, this is not something which we will call as a partnership. Okay, in the case of partnership, there should be a business and there should be the objective to earn profit. This means that persons involved in the partnership must intend the business to yield a profit, and they are all entitled to share in that profit. Let's say Garima and Ankita have started a partnership. We must start a business, and there should be an objective to earn profit. And whatever profit we are earning, we will split that in whatever percentages we have agreed. Okay. Students, there are some examples wherein we say that this will not create a partnership. Let's say I have some funds and Ankita is also having some funds. Now, I want to buy a property. Okay. This property is for, let's say, $1 million. Okay. But I don't have all of this money. I have only $0.3 million and Ankita is having $0.7 million. Now, we have joined our hands together to buy this property. We have joined our hands together to buy this property. Can I call this as a partnership? The answer is no. Why? Of course, there are two or more people involved, but there is no business over here. We are just co-owners. We are just joint ownership of this property. There is no business. If there is no business, there is no partnership. Okay. So just having a joint ownership in the property does not mean that it is a partnership. Then, sharing of the gross returns. Now, what is this sharing of the gross returns? Let's say we have decided that we will do some work, and in that work, whatever money we collected, we will share that. Does it mean that this is going to be a partnership? No. Until and unless there is a business with a view to earn the profit, we cannot call it as a partnership, even though we are sharing the returns. It doesn't mean that there's a business. There should be a clear business with an objective to earn profits. Then sharing of expenses. Let's say we have decided to go for a picnic, okay, and we have all of us have contributed some money. Now, just because we are contributing some money and sharing the expenses, does it mean that it is a partnership? The answer is no. Why? The same reason. There is no business, there is no objective to earn profit. So everyone will have to see there should be two important pointers. One, there should be a business. Second, there should be the objective to earn profit. If you see these two things, then you will call it as partnership, otherwise not. Let's read this example of a case study, Cox versus Coulson. The facts of the case were that C agreed with M that M would put on a play at C's theater. So C is having a theater, and C and M together they decided that M would put up a play at the theater which is owned by C. C was to have 60% and M was to have 40% of the gross of box office receipts. That means they have decided to share the gross returns. C paid the expenses of running the theater and M paid the expenses of putting on the play. So they are both doing their own work. C has decided that I will make sure to expend all the running expenses of the theater, and M will make sure that he will do all the expenses for putting up the play. During the performance, the claimant who was in the audience was accidentally shot by one of the actors. The claimant sued C, claiming that C and M were in a partnership. Now, how can I say that they are both having a partnership? Only when they start a business activity, only when they start this business activity to earn a profit. Here in this case, C was not M's partner because they were just sharing the gross box office receipts. They have not started a business. They have not agreed that we will share this much of profits. Okay, they were just basically sharing the receipts, not the profits of the business. A partnership begins as soon as the partners start their business activity. That means if, let's say, we have not decided of a particular date when we want to start a partnership, but if we have started a business activity, it will be agreed that there is a partnership and the partnership is beginning. The actual agreement may be made earlier or later on that date. That means if I have started a business, it will be presumed that the partnership is started. The partnership agreement is actually a contract. Like any contract, it can be expressed. For example, it could be in the oral form, it could be in written form, it could be in the form of a deed, or it could be implied as well. Implied means which could be understood from the actions of the parties. So the partnership could be either expressed or it could be implied. The partners will be contractually bound by the terms that they have agreed. So whatever are the terms that they have written in the partnership for deed, all of the terms will apply to all the partners. However, if there is any conflict with the Partnership Act 1890, then the whatever is written in the partnership deed will prevail. So if we have agreed for some specific terms in the partnership deed, then that will prevail. The general terms in the Partnership Act 1890 will not prevail. Okay, I hope you all have understood till now. Rest of the chapter we will discuss in the next session. Thank you, class.